and what you need to know. So today's session is part of our ongoing efforts, as we have always done, to build awareness and promote understanding of capital markets products among the investing and the general public. Before we go into the town hall meeting, allow me to just pass you through a few housekeeping rules. And so before we begin, please make sure that your microphones are muted unless you are called upon. And if you wish to say something, you will need to raise your hands or throw your question or clarification or contribution in the chat box. And at the end of the session or somewhere in between, when we open the Q&A session, we shall read your questions or have you actually clarify if we need to. We shall address all these during that segment. The session is being recorded for your information, and this is all just for educational purposes. Today, we are delighted to have a guest speaker, and this is Mr. Elijah Kabaso. Elijah is from the Capital Markets Association of Zambia, where he is serving as the president of that association of members from the capital markets. So he comes with a lot of expertise and experience from the financial sector, or specifically in the capital markets. He has deep understanding of debt instruments as well as other products in the market. But today he'll specifically talk to bonds and how you might go about investing in them. So I urge you to really make good use of him. I think if you have to see Elijah in his office, it's a whole different ballgame altogether. He might even be charging you, but today he comes for free on this platform that the Securities and Exchange Commission has provided. I think without any further ado from now, I'd like to pass the mic to Elijah Kabaso to take us through the presentation. Thank you.
Thank you, Dingase, and good afternoon to you all. My name is Elijah, as was earlier highlighted, and I will be making a presentation on bond investments. I do hope I'm audible. Please do confirm if I am.
Yes, you are.
Okay, thank you. So this is a presentation we'll be making today on government bonds. And the first slide just seeks to talk to what bonds are. A bond is a fixed income instrument that represents a loan made by an investor to a borrower. So essentially, it's money that is lent to someone else, but in a formalized structure. I think many of us are aware or know what Kalova is, where you lend to people. But this is a formalized and it has documents around it where you can actually lend to companies or a government. So that's what a bond is, and that's what we'll be discussing today, and that's the definition by Investopedia. So bonds can either, as I earlier mentioned, bonds can either be or can be either money that's lent to the government or the corporate company. And this time on this slide, we just talk about the process flow in terms of how a government bond sits. So the government might be looking to raise money from the public investors such as yourselves. And this money essentially is used for public spending. We have things like infrastructure, education, defense, health, and any other projects that the government would like to embark on. And so what the government does is that through the Bank of Zambia, they issue what's called a government bond, where they invite people to lend them money, but with the promise of giving them back money without interest. So the public on the bottom side, they lend the money to the government, and then the government issues what's called a government bond certificate. Essentially, it's similar to what title deeds are. When you buy land, you are given title deeds. When you buy a bond, you are given an award notice, a government bond. That just tells you the details of what you actually hold on behalf of the government. With regard to corporate companies, so corporate companies may be looking to raise money. For instance, there might be company X that's looking to raise money to maybe finance more money that they need to maybe buy land for a certain project or be able to pay off certain things that they need to pay for. And so what the corporate company does is if they don't have the money, they can come to the market and then investors are invited to invest in that company by lending them money. So investors such as yourselves and myself, we lend money to the corporate, and then the corporate issues what's called a corporate bond. And so this essentially is just a tool to try and raise money by the company that the, this is a way for the company to raise money for any projects that they may want to embark on over a period of time. So what are the features of a bond? I think we've spoken about corporate bonds and government bonds and how either a government or a corporate company can be able to raise money. So issuers, it can either be issued by the company, which is the companies within Zambia, or they can be issued by the government through the Bank of Zambia. I think I have shown a label of how the Bank of Zambia logo looks and who they are. In terms of maturity, these bonds can be as short as 2 years. The longest government bond that we have within Zambia is as long as 15 years. So if you're looking to lend money to the government to be able to give you back, to give you over time, you can lend to them as long as 15 years. In terms of interest, it can either be fixed, and most government bonds or all government bonds are fixed rate. So if you agree with them that they'll be paying you 20% per annum for the next 15 years, they will pay you that money. And it's fixed for that long period of time, regardless of the head of state that is currently occupying that office. So the government will always have to honor their obligations. They can also be floating rate instruments, especially for corporate bonds. So a corporate bond they might be looking to raise money, but they'll say that whatever the rate is in the future will give you that interest plus a certain premium so that you're compensated for any changes in the economy at any specific point in time. So that's the structure of what bonds are. In terms of risk, it really depends on the issuer. Government bonds are deemed to be less risky because regardless of who is in power, the government will always be there. Not that I'm discouraging corporate bonds, but we have seen some corporate bonds, some companies not operate for a long period of time, and so they do have some risk as to how they're able to pay you back. However, it's always important to ensure that you do your diligence, you speak to a financial advisor, or you just comb through the accounts for the company to see if there will be an existence for that long period of time. So the risk is dependent on the kind of bond that you're looking to invest in. And then the other feature that I'd like to speak to is how tradable they are. Most government bonds and corporate bonds can be bought and sold on the secondary market before maturity. And we'll speak about this later. But what this essentially entails is that once a bond is issued, and if you miss the opportunity to be able to buy it when it's initially issued by the corporate company, you can still buy it off someone else that has those title deeds, similar to land. I'm sure we know that after independence, people were now able to own pieces of land. But in the event that you want to own a piece of land now, you can buy the title deeds off someone else and buy that land. Similarly, even corporate and government bonds can be bought from someone else, even before that bond matures within the books. So those are the features that we have of bonds. In terms of what the benefits are of government and corporate bonds, you may be asking yourself, why do I need to invest in government bonds or corporate bonds? They are deemed to be fairly safe because whenever you have no options to put your money in, and maybe you do not know much about the companies that are operating within Zambia, you can put your money in a bond that will essentially pay you back interest whenever it falls due. And these bonds are fairly stable, especially when they come from stable governments such as ourselves, such as in Zambia. And then obviously further due diligence needs to be done, especially when you invest in the corporate bond. do not invest blindly, but please do ensure that you're able to comb through the accounts and know what you're investing in even before you put your money there. They also give regular income. Similar to what property does, government bonds or corporate bonds can pay you interest, and they do pay interest normally every 6 months. So every 6 months you receive a certain portion as interest, and then the next interest payment will be 6 months later. And this is on the fixed rate that you would have agreed to even at initiation. Sometimes the returns are adjusted. So in the event that right now, the rate's at 20% on a 15-year bond. You'll be paid 20% on that bond. But in the event that rates improve, and especially this is mainly prevalent on corporate bonds, whenever the rates fall, especially if they're referenced to a rate that's currently obtaining on the market, you can get a better interest rate if rates increase. However, also on the flip side, if rates decrease, you'll be receiving less interest over time. So these returns are adjusted according to what the market is doing at any point in time. It also allows you to diversify your portfolio. I think bonds are less volatile. They don't change in value as much as stocks do, for example. Stocks is where you own shares in a company, and if you go to the LUSE and then you check the share price of company X, you might find that today it's 6 kwacha, the following day it's 12 kwacha, the other day maybe it drops down to 3% to 3 kwacha. Bonds are essentially less volatile than stocks are, and why they're a benefit for investors. They're also fairly predictable. If you lock in your rate at 20% for the next 15 years, that's what you'll be getting per month, and why it's fairly less volatile as well. And you can actually predict how much money you'll be paid over time. In terms of the available government bond instruments that we have in Zambia, we essentially have about 6 issues, and these bonds are issued every month. So it should be between the third and the fourth week of every month. The government, through the Bank of Zambia, issue bonds, essentially inviting people to be able to lend money to them. And right now, the rates at about 20% on a 15-year bond. It's about 19% on a 10-year bond. It's about 18.5% on a 7-year bond, about 16.55% on a 5-year bond. The 3-year bond is currently obtaining at about 16.5, and the 2-year bond is at 15.50. Now, many of us, if you do follow the news, you know that today the Zambia Statistics Agency did publish their inflation print, and inflation is currently at 14.1%. That's a key metric to ensure that that also guides how you're able to invest in these bonds. What you want essentially is that over the long term, what you're getting from these bonds is higher than how your inflation is over a period of time. What is inflation? Inflation is the rate at which things get more expensive every year. And you want your money growing faster than that rate, and why it's important that you also keep that in mind even as you're investing in government bonds. Um, the next slide shows corporate bonds. So remember, I did mention that bonds can either be issued by the government through the Bank of Zambia, or they can be companies that come to the market and say, we want to raise so much money from the public. So we have a number of instruments that are currently trading on the market. Some have been issued by Real Estate Investment Zambia, and this is a dollar instrument. And we also have CC Renewables, who have issued a $53 million dollar corporate bond and $96 million corporate bond that currently at about 9% and 8% respectively. And these are in dollars. In kwachas, we have the likes of Easeway and Bayport, who have come to the market, as well as the International Financial Corporation, who have issued bonds that are for periods between 3 years to as long as 15 years. And that's the CC bond, which is that long. And these essentially have just said, we have a project, we want to finance something, please do come on board so that we're able to finance the project. And people have actually invested in these bonds with these companies. So every 6 months, these people would be paid interest whenever it falls due. Something interesting to note is in the third column, you note there is something that shows the rate. For those that are rates, essentially, those are fixed rate instruments. But for those that show, for example, on the Bayport one, it shows 364-day T-bill plus 500 basis points. It means that whenever you're getting your interest from the company, it will pay you what the prevailing 364-day T-bill rate is plus about 5%. So the current rate is about 14.5, 14.5 plus 5%. It tells that they'll be paying you 19.5% on any corporate bond that you're looking to invest with the company. So that's what corporate bonds are. And this information is available on the Luce website. They do publish results as well as information on any corporate bonds that have been issued on the public and are available for investors such as yourselves. The next slide now delves into how one does get to invest in bonds. Beyond all the information that we know about bonds, how can we actually, put this into practice? As I said initially, there are two avenues that you can do this in. I think many of us are familiar with malls. Malls are essentially markets where you have different companies that are looking to sell your products. Similarly, we also have something similar in financial markets. The first kind is a primary market where the person that is trying to raise money essentially has contact with you or myself, and then we buy a bond directly from the people that are looking to sell or to raise money. So we lend to the government directly, or we can lend to a company directly, and they're able to we can then fix um, a contract. The second route is secondary market. What is the secondary market? The secondary market is after myself, Elijah, I have bought the bond. Do I really want to keep holding on to it for a long period of time? And once the answer to the question is no, I don't want to hold on to it anymore because I've gotten what I need and I want to do something else. Maybe I want to build a house, or I want to further my education, or I want to pay for my kids or anything else. Then I can actually sell that bond that I had, whose title deeds I have, or whose award certificate I have, to another person. And the key people that you need to contact to be able to help you with this process is commercial banks. Most of us may have bank accounts, and those commercial banks are able to facilitate or help us in ensuring that we're able to sell those bonds. Another route is contacting any broker. I think we know brokers for being able to being the first point of call whenever we want to buy or sell shares. However, we can still reach out to them whenever we want to buy or sell bonds, or buy a bond that's owned by someone else that previously bought it directly from the company. So those are people that you can contact. Another segment of people you can contact are financial advisors. These may be wealth management companies, pension funds, or people that sort of do advisory work around financial markets. Something you may need to ensure that you do once you're contacting all these banks, brokers, or financial advisors is that they are licensed by the Securities and Exchange Commission. The Securities and Exchange Commission is a body that just ensures that you and I are protected from anyone that may want to defraud us of our hard-earned money. So whenever you get a call from anyone saying that they're a broker or they're a financial advisor, it's important to ask them if they're licensed by the SEC. If the answer is yes, please ask them to be able to avail their certificate to you or their license to you. Just like we have a driver's license, people that are in financial markets also need to have SEC licenses. And when they show you that, then you have the comfort that they're able to advise you properly in terms of what you can buy and sell in terms of bonds. So please ensure that whoever you contact is licensed by the Securities and Exchange Commission of Zambia. Now, I think we've spoken a lot about the secondary market. This slide just speaks to the primary market. Usually, the government, through the Bank of Zambia, publishes an invitation, and this is an invitation that was made for the month of June, and that's the auction that just happened last week. So they would be telling you that we have bonds that are going to mature within the next 2 years, 3 years, 7 years, 5 years, 10 years, and 15 years. And we're inviting people to bid with a maximum value of about 1.8 billion kwacha. This is how much they're looking to raise in the last auction. And you can either be a competitive investor, meaning that you can actually say that for the money that I have, I want X rate. And for this, you have to be a fairly big investor. You have to have at least a minimum of about 500,000 kwacha to be able to buy a bond. And the second route is where you can buy a bond through the non-competitive route. And this essentially says that, okay, I'll give you money. I don't care what the rate will be, but I just want the bond to be able to pay me interest. And then whenever the auction closes and everything is finalized, they'll be able to advise you what the rate is. And then therefore you'll be able to participate going forward. So that's what it entails in investing in government bonds on the primary market, and these auctions are held every month of every year. Now, we've spoken about the good things. Not that I'm scaring you with this slide, but it's important to also know what you need to be aware of before you make your investment. There are risks to everything in this world. When you're driving from home to your workplace or anywhere else, there was a risk that you may be in an accident. Whilst the risk might be there, it does not entail that you should be scared to drive on the road, but it just means that you should be careful even as you're driving on the road. Similarly, even when you're investing in bonds, there are certain things that might happen that might affect your investment, but these are not things that should scare you off. That you should just be aware of even as you're buying. The first of which is interest rate risk. You might be looking to buy a bond, maybe a 15-year bond, it's at 20%, but you're not sure will the rate go up or down in the future. If it goes down, then you actually benefit because your bond is fixed at a fairly higher rate. But if the rates go up, then the new investor is going to benefit because their rate is actually a little higher because they invested a little later. So these are things you need to be aware of even as you're investing. Another thing is inflation. Right now it's dropping. It's a good thing for investors because your money is growing at a faster rate than inflation. But in the event that, like we have seen in previous years where inflation goes to as high as 25%, if you lock yourself in a 5-year bond or 10-year bond, will you really it entails that your money is growing at a slower pace than inflation is, and that's a bad thing. So even as you're investing, you need to be cautious, maybe invest a little here and a little there for different tenors so that you're able to be protected from such risks. Another thing to be aware of is reinvestment risk. Right now, you will invest in a 5-year bond, for example. It will give you maybe 16% return. After 6 months, you receive a coupon. But what do you do with that coupon? In the event that the rates are further dropping, it means that you'll be reinvesting those coupons at a lower rate. And so that's a risk to be aware of and things you need to be balanced in terms of ensuring that you're able to invest. Another risk is sovereign risk. Um, so we've seen in other countries, it hasn't happened in Zambia where the government has issued bonds that are denominated in kwacha and failed to pay. The government has always honored its debts in kwacha. So that's something to be aware of. Will this government still pay back interest? There's nothing to worry about, at least in Zambia, on the kwacha denominated bonds. But that's something to be aware of even as you're making such an investment. And the same applies to companies. the company that you're lending to, if you're lending money to company X or company Y, is this company still going to be in operation in the next 5 years or 10 years? So that's something to be aware of even before you invest in these bonds. Another thing is currency risk. Right now, the kwacha has been at about 23 kwacha. It's just below 24 kwacha. We do not know where the rate might be. There are a lot of factors that go into how the rate moves. But something to be aware of is if maybe you have a kid that you want to pay for school fees or anything else that's outside Zambia, and then you invest in a 10-year bond. If when you get your money back after 10 years and then they're going to college, would the money still be worth what it is in dollar terms or in any other currency that you're looking to convert into? So these are things you should be aware of, but they shouldn't really always deter you from making these investments. Just things you need to be aware of and ensure that you're able to mitigate any risks that may come from that. The last factor is liquidity risk. Sometimes you might buy a bond, but not able to sell it whenever you have something. Say, life is diverse. Anything can happen. You may buy a bond of maybe 100,000 kwacha. The next month, something happens to you that really needs you to liquidate that money, will you be able to easily sell that bond? And why it's important, as I mentioned earlier on, that you assess how these bonds have traded before, but furthermore, speak to licensed capital market operators. These are companies that are licensed by the Securities and Exchange Commission, and then they should be able to ensure that you are able to get or to get money out of the bond that you hold or the title deeds essentially that you hold in on any government bond that you hold. So those are the risks that you should be aware of even before you make any investments in any corporate or government bond. That being said, I'll pause here. I tried to make the presentation as brief as possible, but informative to ensure that people are able to relate and be able to have enough time to ask any questions if there are any. Thank you.
Thank
I'll
you
hand
so
over.
much, Elijah,
Okay,
for that
thank you.
very insightful presentation. I like the way you actually started the presentation with that nice definition, simplified definition of what a bond is. And that is really important to help us move with everyone. We know that there are those who are already pro at investing in bonds and they just want to improve their knowledge, but we also have first-time investors. We now move to question and answer, but I think before I go, I've already seen a number of questions in the chat. I would like you to just go through how a first-time investor might go about investing, and also is this for everyone? Is how easy is it? Some people we come across a lot of people who will say, I don't have enough money, I can't do investing. It's for the rich, or it's for bigger institutions or big institutions. Could you just demystify that for us? Is this investing business for everyone?
Thank you, Dingase, for that question. So investments in bonds are for anyone and everyone, as long as you have a bank account to start with, of which I know many of us who are on this platform should have. As long as you have a bank account, so that whenever the government is paying you back interest, you have somewhere that you can get your money from. And this is also done because, moving to a digital age where things are done electronically, you may not be able to essentially go to the Bank of Zambia and say, I bought a bond, please pay me in cash. That facility is not available. So please do have a bank account and then anything can be done. In terms of amount, the lowest amount you can invest in a government bond, especially, is only 1,000 kwacha. So with a minimum of 1,000 kwacha, and I know this is a 1,000 kwacha that people can easily blow on lunch. But yeah, with the minimum of 1,000 kwacha, you can still invest in a non-competitive bond and you'll be able to benefit from all these benefits that you have. There's a Chinese proverb that says, a journey of 1,000 miles begins with one step. You don't need a million kwacha to be able to make an investment. Even with that one little step with 1,000 kwacha, you can still make any investments that you may want to make in the government bond as well as corporate bond space. For corporate bonds, I'll be quick to mention that some of them have minimum amounts that may be a little higher. It's always important to know the conditions that come with any issue. But yes, for government bonds, at least I'm very convinced that you can invest with as little as 1,000 kwacha only. Thank you.
Thanks, Elijah. I think I can now move to questions that are in the chat. But before I do that, I would like to just welcome or say hello to those who are following us on our Facebook page. I've seen quite a number of people have joined using that link. And feel free to also send through your questions. We'll be able to capture them and respond to you. So we go to the first question that's in the chat. It says, how does one buy and sell bonds on the secondary market? I think I did hear you speak about this, but maybe just for clarity or emphasis, you may respond to that question. You might also respond to a similar one, quite related question, which is, are corporate bonds transferable? Are corporate bonds transferable? So those two questions before we move to the next ones.
Okay, thank you for that question. So in terms of how you can actually be able to trade on these bonds on the it's important to first of all know what you're buying. Are you aware of the conditions, the condition of the company? Is it a going concern? Is it a company that will just go bust in the next 5 years? If you are comforted by the fact that they are going to operate over a long period of time, then that's a good thing. The next thing is to know which instruments are available. And I think I did mention that right now, the publicly issued corporate bonds, I've shared them on the screen right now. They are from Real Estate Investment Zambia, Easeway, Bayport International, IFC, International Finance Corporation. We have CEC and Bayport. These are the bonds that are currently issued within the public domain. In terms of how you go about that, you can speak to someone that's licensed by the Securities and Exchange Commission. The first step is to ask them if they're licensed. If they say yes, please do ask that you see their certificate so that people are not lying that they're licensed when they're not. When you're comforted by seeing the certificate, then you can ask them what kind of instrument you'd like to buy. You can either buy the Easeway, Bayport, or any other instrument that's publicly available to investors. So you can contact either the banks, the brokers, or any financial advisor who will be able to help you with the process. And that's on the secondary market. On the primary market, whenever these companies are looking to raise money, they usually send out a notice in the public, and if anyone is interested, they get to bid through the brokers or through transfer agent or the people that are essentially helping the deal to go through. And then that enables you to be able to get the bond. They'll be able to do all the nitty-gritties. All you need to do is first of all, know what company you're buying, be comforted by the operations, and then contact them by advising what you like to buy, and then they'll be able to share with you whether it's a KYC or any other information that they might need for you to be a bond owner. I hope that answers the question. Thank you.
Thank you, Elijah, for that. We have another question. How do brokers get licensed currently in Zambia? And for this one, I think if there's anybody from the SEC because it's a licensing body for all professionals and all companies. Maybe that can be taken by someone from the SEC. But we have another question which says, what are anchor bonds? Third question
Sorry.
is it wise to borrow money from the bank to buy government bonds? Kindly shed some light on the pros and cons. Thanks in advance. This is from Noble Wembia. I think it's a very good question that it might help him think through.
Okay. Thank you.
If there's anybody ready from the SEC, if not, perhaps I can help there about how do dealers get licensed currently in Zambia. We heard that the Securities and Exchange Commission does license market professionals. They, if one wants to start advising, for example, they become investment advisors, this license is obtained from the Securities and Exchange Commission as regulator, the licensing body in the market. If one wants to become a broker, they need what is known as a dealer's license. Again, they must approach the SEC and submit an application to the SEC. There will be requirements that will be given, and that will be advised at that point. Otherwise, you can go to the website and find a section where you can download the forms, and there's a checklist there for what you need to actually comply with in order to be licensed as a dealer and then become a broker. You will get to have a brokerage license or a dealer's license. That's what it is called. I hope that helps. Elijah, if you can, or if you may, you can answer to the other question which asked about whether it is wise for one to borrow money from the bank and invest in bonds. Over to you.
Okay, thank you. So the good thing with bonds is that you are told what you'll be getting out of it. It's predictable, unlike shares where you don't know how the company perform and what money you get out of it. So for bonds, for example, I'll give a practical example. You might have instances where for government bonds, for example, the longest government bond that you have, or maybe I'll pick on the 5-year bond. The 5-year bond is currently paying at about 16.5, meaning if you give them 1,000 kwacha, or let's say if you borrow 100,000 kwacha, they'll pay you back about 16,550 thousand 16,550 kwacha during that year in 1 year. But if you borrow money from the bank, if you borrow 100,000 kwacha, I know most banks, the rate that is currently obtaining is about 22, 23, 24, thereabout. So you'll be paying the bank about 24,000 kwacha. So you borrow 100,000 kwacha, you pay the bank 24,000 kwacha, but what you're getting from the bond is about 16,550 kwacha. Therefore, just given that simple analogy, it may not be wise to borrow money from the bank to invest in a bond, but essentially money that's invested in government bonds or corporate bonds, whenever they're issued, because the rates are also fairly similar, should be from money that you have in savings, and this is after you've paid off your loan, because and this might be my personal view, but it's because of my practical experience. Loans that we get from the bank are at a slightly higher rate than what you get when you're investing in a corporate bond or government bond. After all, sometimes the corporate companies that we deal with essentially borrow from the market so that they're able to lend money to other people at slightly higher rates. So because of that, it may not be wise to borrow money to invest in a bond. I hope that answers the question. Thank you.
Yes, I hope that was helpful um, to you, Noble. Noble, when they're on the call. Uzi is asking, what happens to the bond in the event that you die? What happens to the bond in the event that you die? I think another very important question for any investor. They need to know um, what happens to their investments when they die. And I think this speaks to what they must do before they die. So if you can advise on that, to be nice. Can a company buy a government bond is another question.
Thank you. So for retail
Over to you,
investors,
Elijah,
that
on
is
those.
all right. Thank you, Dingasa. So for people that want to buy bonds, it's always important that first of all they're in your name, and then whenever as we live in life, anything can happen. Not that I'm wishing bad on anyone, but anyone can die at any time. So it's important that all this information is registered with your lawyer or someone that takes care of your will, such that in the event that you die, these bonds, just like property or anything else, are assets that you own and can be distributed according to the wish you may have had whilst you were living. So it's always important that you have a will that sort of guides how these bonds are. Regardless of whether even if you die today and then the bond is going to pay interest in the next 6 months, it will still send money to your bank account. And even after 6 months again, until the bond dies, if nothing happens to it. So that money will keep going to your bank account. And it's important that the people that you leave behind have the access to that account so that they're able to know which bonds are tied to that account and be able to distribute according to how they should be made. Thank you. I've forgotten the last question. The last question was on Dingase.
Can a company buy government bonds?
Oh, thank you. Thank you for that. Yes, a company can buy a government bond. All companies can invest in any government bonds or corporate bonds. It's an asset just like property is in Zambia. Thank you.
I think I'll skip. I hope, Sia Kwema, you heard about how to go about buying corporate bonds, that you have to go get to a stockbroker. Unless, Elijah, you want to emphasize something there, but we can also, as you do that, you can also look at this other question. Are 15-year and 10-year bonds attractive since they are now paid at face value at maturity? Factoring in inflation, your money might lose value. Kind of self-answered, but please amplify the first part is really a question. Are 15-year and 10-year bonds attractive since they are now paid at face value at maturity? And then there's also what is a competitive bond, I think, related there. Over to
Um,
you, Elijah.
Thank you. So 15-year bond and 10-year bonds fairly attractive. They pay an interest rate. I think what I did mention earlier is that you need to be aware of the risks that you face. A lot of things can happen in the next 15 years. In the next 15 years, we have three presidential elections, and anything can happen in that time. Therefore, it's important that you take that into account. There are also trends around how things get expensive. The Bank of Zambia's target is to maintain inflation between 6 to 8%. We are yet to see how that will be achieved over the next couple of months. And I'm trying to be sensitive not to give my view. However, what I would note is that these risks are always there. And it's important for any investor to be able to make informed decisions. So if you are not in the finance field, please do talk to an investment advisor that will then be able to guide you into it. The comforting thing that I did mention even in the preamble of the presentation is that Inflation has now dropped to 14.1%. Currently, the bonds are all above that rate, so that should comfort the investor that at least for the next year or as at now, the bonds are getting a better yield. In terms of how the coupons are being paid, I think the coupons were lower before. And that then meant that even the withholding tax that you pay on a coupon, because these coupons are gross of withholding tax, whenever you're being paid interest, the government will deduct about 15% withholding tax. So given that, obviously your rate will maybe come to about, for the 20%, it will maybe come to about 17% thereabout. What's important is that whatever you're getting after all this is above the rates that you're getting or where inflation is currently. Thank you.
There's Felista who has raised her hand. Felista, please, you can unmute, or is it Cholo to unmute? Cholo, unmute Felista so she can ask her question.
Hello, good afternoon. So I think I just posted my question in the in the chat box, but I think I wanted to find out are corporate bonds treated or
Did we lose Felistas? Did we lose Felistas? Elijah, can you hear Felistas?
Unfortunately, I can't. I'm not sure you were able to hear a question. I just heard corporate bonds, but nothing further than that. Thank you.
Felistas, if I still see you, if you can still come back or come on and share the question. I'm not sure if you shared your question as anonymous. I'm not seeing your name in the question and answers. We can move to, for now, I think we go to Imelda. Imelda, you can ask your question. Her mic is muted.
Hello. My question is, can you sell parts of the bond? I have a bond, but would want to sell part of it. Is that possible?
Okay, thank you for that question. Yes, it is possible for you to sell part of a bond. You may have bought a bond with a value of about 10,000 kwacha, but maybe you only want to sell 1,000 kwacha, 2,000 kwacha. You can still sell that portion. I think the requirements are that bonds are sold in multiples of 1,000, so that it's just not messy. You cannot be able to sell maybe a bond with a value of 200 kwacha. But if it's in multiples of 1,000 kwacha, that makes it easier even for the banker, the broker, or any other person to be able to assist you. Thank you.
Thank you.
Thank
Thank you so much.
for that response, and I hope, Stacy, that you're good with that. Can we go to, Stacy? Yes, Stacy has her hand raised, and after Stacy, I will read some more questions. We have quite a number of them. Stacy, please. Is Stacy still around?
So my question is, what are anchor bonds and how can one coupons on a monthly basis?
Yeah, did you get that, Elijah? This is asking about anchor bonds. Huh? What are anchor bonds?
Anchor bonds. Able to maybe it could be the pronunciation but are you able to maybe just spell it out in terms of what is being asked?
I think I saw that question in the chat. Anchor, like anchoring. ANCHOR, anchor bonds.
Okay, thank you for that. So these are essentially, I think they're mainly around infrastructure, chemical bonds. We don't have much of them in Zambia, I should say, but these are mainly available in other markets. But they are to do with bonds that are raised in terms of financing that's raised for specific projects, especially around chemicals and infrastructure in some instances and the likes. I hope that answers the question. Hello?
Hello, Stacy. Are you still there? Are you okay? I think you are the one who has said my two questions have not been answered yet. Are you good now?
Yes, I'm good. I just haven't had the strategy on how
So
you
there's another
can.
question, very interesting also. Can I use bonds for retirement planning? And if yes, how can I do that? There was another question which was talking to using bonds. How can I use bonds for, I think it was as an income,
Thank you.
monthly income, something like that, yeah.
Thank you for that question. So with regards to retirement planning, firstly, it's important to know that there will be a time in life when we don't have as much energy as we do now. Right now, what's helping is salaries or business that we're pushing because of the energy that we spend. Retirement, you are not able to do that much, and so you need income that sustains you, or at least sustains the standard of living that you've been exposed over time. So it's important to plan for retirement. It's also important to note that once you retire, sometimes there may also be things like medical bills that may need to be taken care of. That are a little higher than right now what you're facing. So it's important to talk to your financial planner, be able to ascertain how much money you should have once you retire, and then be able to then start saving and building your bond portfolio to be able to give you interest whenever you fall due. When you're in retirement, you'll be receiving money every 6 months on any bond that you buy, and that money can then be used to sustain your living. In terms of using it as income, yes, it can be used as income. Some people might be living in houses where they pay 3 months in advance or 6 months in advance. The bond does something similar in that the government pays you, or any corporate company pays you interest every 6 months. And then that money can be used for any purposes that you may have. So it can be used for income, both now as well as in retirement whenever it falls due. I would also re-emphasize that right now, what's important is building as much money as possible into retirement. Therefore, whenever you invest in a bond and then it pays you coupons every 6 months, it's not advisable to eat those coupons, but to reinvest them in other bonds so that your money or how much you're getting out of bonds is increasing over time. I hope that that adds more color to the question. Thank you. To the answer. Thank you.
Some of the, thanks Elijah for that. Some of the questions that we are seeing are sort of bordering on investment advice. I'll apologize that we try to move away from giving investment advice, especially that it's a platform for regulators. We do not do that, but feel free to find Elijah or any other licensed investment advisor and ask questions to do with for example, how much you might want to, or might be a good amount to invest for a first-time investor. Investment strategies, for example, how you can make most use of it. What suits you as an investor will be different depending on your individual circumstances. All that will border on investment advice. A good chat you have maybe over coffee with Elijah and any other licensed investment advisor. So some of those, I apologize in advance. We will not be answering them, but some of them we are already posting answers to them. Just follow through in the chat. There's a question, another question which has not been answered to. It says, can I buy bonds indefinitely every month, or there is a limit as to how many bonds a person can hold? Question for you, Elijah.
Thank you for that question. There is no limit whatsoever on how much you can have, especially that you're a resident in the Republic of Zambia. You can buy as much as you can. So there's no limit. Just like any other instrument or any other thing, you can keep buying over time. Thank you.
Great, and I think very interesting that you can keep buying as many as you want. There are no limits. There's another question for it's on the corporate bonds. For the corporate bonds, is there a minimum amount you can invest? Are they also issued at par? And do they operate a coupon system for corporate bonds as well? Quite a mouthful. I hope you got it.
Sorry about that. I think I was muted. I was just going to ask, the question was going to be on corporate bonds and what again?
Yeah, the question says, is there a minimum amount you can invest in corporate bonds? Are they also issued at par? And do they operate a coupon system for corporate bonds as well?
Yes. Okay. Thank you. So corporate bonds usually have a minimum, and you have to look at the terms and conditions of each bond that was issued.
Was that clear, Elijah?
Yes, it was. Thank you. So I was going to answer by saying that you have to look at the terms and conditions. I know for some instruments, they do have a minimum of like 10,000 kwacha. Others are even as little as 5,000 kwacha. I think the list I've seen on a corporate bond should be about.
Elijah may be having a challenge with maybe his mic. Francis or anyone from the set, please, if you are still around, if you can help with that question. Is there
Hello?
a minimum amount you can invest in the corporate bonds, and are they issued at par? And do they operate a coupon system for corporate bonds as well?
Hello, am I audible?
I can't hear him.
Hello, am I audible?
Yes.
Okay, thank you. So yes, you can. Yes, you can. They do have a coupon system in them. You will receive your interest every 6 months, just like a government bond. They are issued at par as well. So once you invest in a bond, maybe you put in a 10,000 kwacha, you will receive interest on that principal amount every 6 months at the rates that I've just tabulated in the table. that I'm sharing currently. In terms of minimum amount, these range according to the issuer between dollars and kwachas. So you have to look at the terms and conditions for each of them. But because these are now on the secondary market, I think trading usually should be in thousands. Each thousand in multiples of 1,000. So you can reach out to any broker. If you're able to buy, they'll be able to advise you how available these bonds are to be able to be bought, and then you can move on from that. Remember, once you're buying, there has to be a willing seller that wants to sell to you. So these are issues that can better be dealt with either by a broker or a bank that is licensed by the Securities and Exchange Commission. I hope those answers are sufficient for the question asked. Thank you.
Thank you, Elijah. We have come to the 16 hours mark. We only hold the town hall meeting for 1 hour. I know that we may have missed 1 or 2 questions not answered. Please feel free. We'll drop, I think Choba can drop us a line or an email in the chat, or even on Facebook. You can still try to contact us. We'll be there to answer to you. It leaves me to say thank you so much to Elijah Cabasso, who took time to actually join us and give a very clear and insightful presentation. It has been very engaging. You answered to a lot of the questions that our public might be having right now. We know investing in bonds is a hot topic. A lot of people are interested and discussing it a lot. And it was only proper that we gave more information. I do hope that everybody else who joined us did find it helpful. And I would like just to thank you also to the audience for finding time to join us. And together we can move the agenda of the capital markets. Thank you so much. And I hope to see you next time, next month, same day, the last Thursday of every month. I wish you well and wise investing. Thank you.
Thank you. Good day.